Welcome back to the Investing Iguana. I'm Iggy, and today's episode is all about Centurion Corporation's 1H 2025 results, a name every Singaporean investor should know. If you're holding this stock, watching the SGX, or wondering where the next strong yield play will come from, stay with me. No hype, just deep analysis. Here's why this matters. In Singapore, investors talk a lot about REITs, blue chip developers, and manufacturing. But worker accommodation, it's overlooked. And yet, Centurion is pulling in real growing profits, even when headlines say their bottom line fell. Today, I'm guiding you slide by slide through this newly released report, breaking it down so any Singaporean can see what's really happening behind the numbers. I'm not just your typical YouTuber. The Investing Iguana was just ranked 8th in the 2024 Influential Tigers Awards by Tiger Brokers. We smashed through 1 million total reads and hit 58,000 likes. If you're new, I've produced over 1,000 videos with 600,000 watch hours as of August 2025. Every week, I break down complex company reports and the local and global trends shaping your CPF and SRS accounts. Stick around for my verdict. This is the Essential Centurion Deep Dive. Here's the plan. We'll review the top and bottom line numbers, check where growth is real, and identify profit versus accounting noise. We'll break out Singapore versus Malaysia versus overseas, and why Singapore's core matters most. I'll walk you through the new market launches, discuss risk factors, and highlight what the upcoming REIT means for all investors, especially if you're playing for yield. All right, let's get started. This is where most people look and either panic or celebrate. Let's not fall for headline tricks. Revenue for 1H 2025 hits 140.7 million, up 13% year on year. Gross profit margins, 77.2%, thanks to premium Singapore rental rates and cost discipline. But then you see net profit after tax fell by 35% to 83 million. That's misleading. Here's why. Last year saw massive fair value gains on property, pain-free, but only on paper. This year, much smaller revaluation boosts, so the accounting profit dropped. Instead, look at net profit from core operations, up 22%, now 65.4 million. That's what really matters for dividends and long-term strength. If you want stable income and core strength, Centurion's underlying business is actually accelerating, even if the headline grabs don't say it. Singapore is the absolute engine here. Revenue from purpose-built worker accommodation in Singapore shot up to 99.2 million from $85.1 million last year, an impressive 17% jump. Occupancy? Still at 99%. That's basically unheard of in real estate. And with the new Westlight UB facility launching in December 2024 and filling up fast by April 2025, Centurion is showing market demand will mop up new supply straight away. If you're using CPF or SRS money to build a long-term property income play, this segment offers almost REIT-level occupancy while still having room for rental increases. Now Malaysia, a much tougher environment. Revenue was flat at $9.5 million. Occupancy dropped from 91% to 83%. Why? The Malaysian government capped foreign workers and issued temporary housing licenses, called TLQs, to ease shortages. Short-term solutions, yes, but they add real, near-term competition. Still, Centurion managed flat sales because rental rates went up and the ringgit strengthened. For Singaporean holders, Malaysia is no longer a growth anchor. It's just steady. Malaysia remains a volatility factor, not a core profit driver. Let's talk about new bets, Hong Kong and China, both early in their journeys. In Hong Kong, the new Westlight Sheung Shui facility sits at 28% occupancy. In Xiamen, China, the build-to-rent asset is 47% full. These are not game changers yet, but show Centurion's pipeline and potential for new core contributors in the years ahead. For local holders, think of these as growth options, but don't count on them for SGX-level returns just yet. Zooming out, here's how the revenue pie looks globally. This tells Singapore investors that local assets are still king, but overseas student accommodations are building meaningful contributions. Next up, student accommodation. The UK market delivers $22.5 million revenue with 97% occupancy. Australia, even with a weaker Aussie dollar, pulled in $7.7 million at 91% occupancy. The breaking news is the new EP1041 Premium Student Housing in Sydney, opening semester 1, 2026. Right as Australia is raising its foreign student cap. Expect rising demand and pricing power when it comes online. Student accommodation, steady today with sparks of future upside. Time for capacity. Here's Centurion's physical asset footprint and growth plans. With more than 70,000 beds, Centurion is Southeast Asia's largest player in this niche, and still growing. A big piece coming soon, the REIT. Spinning off these accommodation assets into a REIT will unlock substantial capital, reduce risk, and may boost yields for existing shareholders. Management just declared an interim 2.0 Singapore cent dividend, demonstrating real, continued payout to holders. Singapore's REIT sector is crowded, but few have this kind of asset mix or stable growth runway. For even more granular data, detailed financial models, and a full written breakdown of this Centurion report, including an extended valuation analysis, make sure to check out our Substack. The link is right there in the description. If you want the spreadsheet breakdown, comparisons to other yield plays, and my CPF allocation strategies, join the community. Let's wrap up with my bottom line. Based on these results, Centurion earns a strong buy for local, income-focused portfolios. Singapore PBWA is a fortress, high occupancy, protected demand, government-driven tenant pool. Student accommodation adds global stability and future upside. The upcoming REIT conversion could further release value and set up a higher yield. Risks: Malaysia's volatility, FX swings, and ongoing regulatory watch. But this is a stock I'd consider as a long-term anchor, especially in any CPF or SRS account aiming for property-linked growth with a dividend core. Here's what to watch next. Keep an eye on REIT's IPO progress. Watch occupancy and new bed delivery in Singapore. Consider accumulating if markets overreact to international volatility. That's a wrap on Centurion's 2025 deep dive. Key message: ignore the headline profit dip. Focus on cash flow, Asia's acute demand for quality accommodation, and Centurion's unique positioning. Did this breakdown help you? Please comment which segment you're most excited about, hit that like button, and subscribe for the next deep dive. So we've dissected Centurion's 1H 2025 report, and I've given you my personal take on what it means for your investments. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $3 a month, about the price of a cup of coffee. Think of it as your consistent, daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today. And after this, check out our previous video, Why Singapore REITs Are More Resilient Than You Think, for deeper REIT comparisons and CPF yield strategy insights.